All right. What's up, everybody? Welcome to another Mortgage Coach Trust Engine Tuesday interview. Every Tuesday, 9 o'clock, I am bringing on awesome human beings. Sometimes it's an author, it's a speaker. Most of the time, it's a badass mortgage professional that's winning in the current marketplace. And it's a tough marketplace out there right now, but there are people winning. I mean, there's over 7,000 loan officers that are doing over 100 loans this year. And there's over 1,000 loan officers that are going to do over a couple hundred loans. So there's still a lot of people gaining market share and winning in this market. Today, Austin Lampson is our special guest. This is my second interview with Austin. My first one was with Jeremy Forcier recently. You remember that, Austin?
Oh yeah, gotta love a little J-force moderation, right? Is that a word we can say with Jeremy? Moderation, is that a thing? We can do that.
Not when it comes to Jeremy Forcier. Like, moderation is not his thing.
No,
but passion, awesomeness, and humor are his things. So guys, if you like what you hear today and you want to hear more of Austin, we'll put a link down below to that first interview that we did. Today, I have Austin one-on-one, and I have this entire community. So anyone watching this live, if you have questions for me or Austin, put those in chat. And if you're watching this on our YouTube channel, which is our biggest audience, any questions, any comments, things that you really like, put those down in chat. We'd really appreciate it. So Austin, if you could jump on stage and just share a little bit about your mortgage practice for anyone that is hearing from you for the first time.
Sure. So here's a little background on me. I've been in lending for 25 years, since I was the age of 18. I was in consumer finance, like literally 1 month car title loans, 25% interest. If you didn't pay your car, I'd repossess it back, right? And that was when I was 18. And then I moved in consumer finance, switched to mortgages when I was 22, was an assistant, moved into operations at 27, lived through the countrywide Bank of America takeover as an underwriter. So I am a big fat freaking nerd, y'all. Like these are real. It's a thing, right? And this is my 11th year originating. So I started from scratch 11 years ago. I kind of got kicked in the teeth by my mentor at the time. So really had to figure out, what do people need? How do we help folks? Why am I actually doing this? And now I run a team out of beautiful Santa Barbara. Speaking of crazy stats, I was going to give you one. There are like 88 houses for sale in my market. 88. The median price point is 2.2. And of those houses, about 47% are cash is what we average. And we're going to close 12 loans this month. So that means we're doing about 25% of the business in the market. And it's not easy. It's super crazy competitive, right? I deal with a lot of jumbo. We've got private wealth. And one of the tactics that we've been winning with is what we're going to get in today. And I love making a good, crazy headline. Dave was like, what does this mean? What is this? What are you talking about? Like discount data. So if you know me, you know that you'll hear me say pretty consistently, what we do is a balance of math and emotion. And Dave, that's what I love so much about the platform that you've created, is like your whole intent is not like shiny numbers, don't look behind the screen. Like the whole intent is like, how do we dig deeper so people can build wealth, so they understand what they're getting into, so they can ask better questions, and so that we are truly the problem solvers. We are truly those advisors for people. So I run a team, like I said, here in Santa Barbara, California. I work for Homeowners Financial. We are an independent mortgage banker. I love our guys. Yeah, all the things, right? All the things.
I love that. And data driven. I love that you know how many homes are for sale in your market. I would push anyone listening to this. Do you know how many homes are for sale in your market? I love to know that you're tracking your market share. She knows, like, hey, this is how many are cash. I'm doing 12. I'm gaining market share. Those are all hallmarks of the best. She works for a company that has an enterprise relationship with MortgageCoach and analyzes, looks like, hey, how are the MortgageCoach loan officers converting versus the non-MortgageCoach loan officers? And I don't know how your conversion compares personally to your peers there, but I know at aggregate, the loan officers that use MortgageCoach at your company, I think it's 8.7%, almost 9% better conversion, which, guys, when you add that up over the course of a year, it's a lot of money for a company. It's a lot of money for a loan officer. So the headline today, you called it data and expectations / disc and data, or excuse me, disc and digits. So why'd you pick that headline? I'm really looking forward to unpacking this.
Yeah, definitely. And so, again, we're dealing with math, we're dealing with emotions. And the first thing I wanted to really key in on is the difference between being an order taker and being a true salesperson, right? Salespeople have influence. Salespeople help lead folks into asking better questions. Salespeople are really, we're the guardians of information, right? And back in the day, there wasn't Zillow, there wasn't an online calculator, there wasn't this and that, right? And so there was literally us and our HP 12C rocking it with a spreadsheet for folks. And so now we have to remember that has shifted. And part of our job still continues to be to advise people correctly. I mean, that's the most important thing that we do. We have to remember, though, that we have to switch between how people are wired and what they can find at their fingertips and what the reality of that is, right? I mean, I say Google lies to clients. I'm like, hey, Google's lying, will lie to you. No offense, Google, right? But Google's feeding an algorithm, not asking a question and answering a question the same way that a professional would. So when we're talking about our DISC personality types, I'll dive into that real quick, simply because I want to make sure everybody knows what that is. And then how do we change our presentations to meet the folks at their level? Cool.
Yeah. So math and emotions, and I guess we're going to go through DISC so that you could see how you approach different people with those two tools. Let's go.
Yeah, and I'll keep it simple, right? So your DISC personality types, there's a lot of different personality tests out there. The Ds are your dominant, your bullet point. Typically, they're salespeople, right? We want things clear. We want things to the point. We want to stick to business. We want to move it forward. The Is are your emotional people. They are your influencers. They are the party people, right? And then your S's, the majority of people are S or have a bit of S in them. That is your steady Eddie folks, right? That is like, it's going to be consistent. It's going to be as expected. Please don't move my cheese. The sky could fall. And then you have your C, that are your compliance people. I mean, we think engineers, think military, think people that want you to be super, super realistic for them. So what I love about MortgageCoach is when you get towards the end and you get towards the presentation, you've gone through all the math, you can change the message. And you can change that message from, incoming surprises, outcoming surprises, right? We can change it to them. So I encourage every single person that's listening to this, watching this, that's somewhere in your notes, somewhere in your intake process, you're asking questions to figure out the client's personality type. You're saying, tell me about the house, right? And your D people are like 3-bedroom, 2-bath. Your I people are like, oh my gosh, the backyard's gonna be amazing for Halloween parties, which is my favorite holiday, to be clear, right? Your S's are like, well, I just want to make sure it's got some good bones, right? And then your C people are like, I haven't seen the report yet, I can't tell you, right? So I encourage you to develop, and there's a lot of ways that you can do that, develop these questions so you figure out who are you speaking to? And you must remember, you might be speaking to the husband or the wife. Maybe there's 2 wives. I don't know, right? You're speaking to one party. You have to encompass both. You got to figure out when you're meeting with 2 people, who turns and stares at the ear of the other. The one that's being stared at is that person that's making decisions, but you still need to play to both. So if we're getting our personality types aligned, right? Are they the dominant? Are they the warm and fuzzy? Are they the steady edge? Are they the compliance? We need to adhere our presentations to that, right?
So I don't know if I brought speed to need up on the last time that you and I did an interview, but I've been talking a lot about how in this market, speed to lead is no longer enough. I mean, and by the way, not just in this market, I think going forward in the mortgage industry, the new most important thing you can do is speed to need and really get to the need of the consumer. I know, you've been in the core for a long time, so you're very familiar, and you probably teach Triangulate for trust, right? Like super familiar with that personally, a term I said for the first time a couple of days ago, which is triangulate for need. And some of that has to do with the needs of the consumer in the market. But as I was hearing you talk about DISC, I think when you triangulate for need, you're not only looking at, is low down payment a need, is, again, there's dozens of needs that people have in this market, but you're also triangulating and you're putting in their DISC score. What are your thoughts on that? Triangulating for need and kind of blending both personality characteristics and market content. What are your thoughts on that?
Yeah, absolutely. Right. And this is where we're going to move their focus, right? Dear borrower A, your main goal was to have money left over to decorate, right? That means you're looking at a different low down payment option. Dear borrower B, your main goal was that it hits your bullet points of your budget. Now we're talking about a monthly payment. Dear borrower C, right? You really want this to be steady over time. So let's talk about how, this is going to be fixed and grow your wealth, and this is going to help you. And dear borrower C, hey, let's go into the nitty gritty. Click here, open this up. Like, here's the exact closing costs. Here's what can change. Here's what can't, right? So when we're talking about triangulating for that need, we have to remember people's need is emotional and it's data driven. People are not necessarily always buying houses simply because the math makes sense. They're buying it for security. They're buying it to build wealth. They're buying it to invest in a community, right? They're buying it so they don't get kicked out again and have to tell their kids they're moving before the holidays, right? So when you're talking about that need, Dave, like, we need to remember the need is not simply the house. The need is how they feel about the house. And our need is to be able to deliver that on their terms, how they're going to stand it, how they're going to process it. And you want clients to ask questions. I think we have to remember that too. We want clients to ask questions, because if they're not asking you questions, they're asking somebody else. And they're either asking somebody online, they're either asking a friend that's not going to tell them the right thing, or, try to get them to work somewhere else. They're going to be asking other questions. So your goal is to give them information so they feel so they feel safe, so they feel heard, so they feel appreciated, so that you're diving into their why and drawing more out of them. To ask, okay, great. Now let's review this further. Okay, great. So you said this can change with this can't, right? So that you're constantly getting in deeper, and really defining that together.
Love it. Well, I'm looking forward to breaking down the emotion in the math, how you're triangulating for needs. Liz asked a question in here. We don't do HECM loans. So by the way, Liz, just FYI on that. Everyone, please put your questions in comments and keep the reactions coming. As you hear something that you like, let us know it. So where do you want to go from here? You want to walk us through a story or strategy, or you want to unpack, the headline anymore?
So I told Dave I got a new mouse and keyboard yesterday. So I'm like, economics, there's a roll bar. It's going to be great. Okay. I'm going to go straight into the presentation for this one.
Tell us a little bit about the consumer story and just kind of the needs, like literally let's unpack how you triangulated for needs, and then let's show how you presented to that consumer to address, both their personal needs and their, kind of math needs.
Yeah. So all names have been changed to protect the innocent, right? So this one's going to be Wednesday Addams, just saying, happy Halloween, right? And so my conversation with them was really going into, hey, it's so expensive. Maybe we'll keep saving, right? Maybe we'll keep saving. Because if you missed at the beginning, the median price point in my market is like 2.2 million, right? And so that's not necessarily mean I'm doing $2 million loans, right? We're doing a lot that are high balance. We're doing a lot on the, there's still 1 million, there's still 900, right? Which I understand are big numbers. However, when we're talking to this individual person, this is a first-time home buyer. They've been saving. They're like, gosh, rates have gone up so much. Gosh, how do we actually, how do we afford this? We need to keep saving, because everyone has that myth in their brain that the more they put down, the lower the payment. And that's true on drastic points. That's true between 5% and 50%, but it's not necessarily true between 5 and 10 or 10% down, or even 10 and 20. So this one, I left the welcome message as it is. Let me click.
And when you put this is kind of a why buy now, you know, like
Yeah.
you're helping this consumer kind of work through like, hey, should you wait? Should you do this now? Is that fair to say?
Yeah. Right. And where do they spend their money? Right. To understand how much is the differences in the payment level and the cash to close level. So I'm going to
And
share
by the
my
way, guys,
screen.
I just put a link to Austin's Why Buy Now TCA in chat. We will also get that link in, you know, if you're watching this on YouTube, it'll be down below. And in Facebook, it'll be down below. So,
Cool. I'm gonna go ahead
all
and
right.
share this one.
Yeah, let's go.
All right. So there it is. All right. So you can see I left the message the same because I wanted to go through like, how do we craft that message for this person? So again, talking to our friend Wednesday Adams, right? We're looking at today's prices. We're showing her what the monthly payment difference in savings is if prices increase by 5%, and then if the down payment increases by 5% and everything else stays the same, right? So really, if she's moving in this world, and I used $1.5 million as a threshold, if she's moving in this world, the difference between her monthly saving on today's price and if the down payment increases by 5% is like $500 a month, right? Like we can see the difference between the 1045 and the 507, right? It's $500 a month. So my conversation to Wednesday is like, is your $500 a month worth just about $40,000, just under 40,000? And how quickly can you save that much? Can you save that much and assume that prices are not going to increase by 5%? Because in my market, prices are still increasing, right? I understand that's not the case for everybody, but again, we're talking about markets where we're talking like, how much extra is this buying you? And so for Wednesday is a warm and fuzzy person, right? You would never know it from the TV show, but Wednesday is actually very, very kind. And so when I was looking at this for them, I wanted to focus on how much do you actually save each month and what does that buy you? So if I'm going back into Wednesday's, there it is. And I'm going to go into Wednesday's message. My what message to Wednesday. Now, can you guys still see the message side of it, or did it pop out? Is it okay, Dave?
Yeah, we see it. I see it.
Okay. So for Wednesday, I'm gonna be like, hi there, right? So wonderful to connect, right? I'm gonna bring this emotion into it. I'm not gonna spell things correctly because everybody's watching this live, so why not? You know, I'm gonna use notes like as promised. We're delivering our expectation. So as promised, no matter anyone's personality type, they want you to do what you say you're going to. You know, here's the thresholds to help you show how quickly we can get you home for the holidays, right? So we're playing into that. It was lovely to connect, re-engage that warm and fuzzy. We're playing into, hey, I made you a promise and I'm keeping it. So we're building the trust, right? And then how quickly we can get you home for the holidays. And as you said, that's triangulating for the need. Wednesday, being a high I, warm and fuzzy person, wants to have everybody over for the holidays, right? I might spell out the difference here. I would probably call them again the next day, because if somebody's a super high I, they're not necessarily always focused on the digits. I'm going to stop that share real quick and make sure I'm not skipping over any questions. But does that make sense for y'all? I mean, does that make sense, Dave, how we're going to play in a bit of the personality, bring back that warm and fuzzy that they like, say that we're delivering on our promise, that's building that trust, right? And then go back to their goal, home for the holidays. They want to have everybody over for Christmas. Go back to that goal.
Boom. So guys, you just got a master class in addressing one of the biggest needs in the market today, which is people are not clear and confident. Like, should I buy now or should I wait? She, you know, put in some math, some, you know, local economics. She knows what appreciation rates are in her market. She could cite those. She's, just showing, like, not selling, just showing what that looks like. And then she's personalizing it. And then she's putting it in a language that connects personally with that customer's personality. So masterclass. Now, I don't know, we'll see how you do on this, but I would love for you to maybe share some nuances. It might be the same TCA, but like you did that for the high I. What if it was a D? What if it was an S? What if it was a C? Can we just see some of the nuances as to how you might change the way you position this based off of personality type?
Yep. So if it's a D, remember these are bullet point people. So you'd be like, hey, Wednesday, here's what I promised you. Look it over. Line 3, I'm going to call you tomorrow.
Boom.
Right? You delivered. Again, you guys, that as promised is super sexy time. Like, please steal it and run with it. As promised, as promised, as promised. Like every single email, as promised, here's your appraisal. As promised, here's this follow-up, right? Say it, say it, say it, say it. As promised, you're delivering, you're delivering, you're delivering. Put it in notes, right? So that was our D. We already did the I, so let's talk about the S's, right? So same kind of conversation where we're talking about, do you save more? Do you not? That S wants it to be steady. So for the S's, we're going to really, really concentrate on their monthly budget because they want their monthly budget to be stable. So, hey, Wednesday, as promised, I'm following with the scenarios so we can really get clarity on the best use of your monthly cash flow. It is super important that you have this stabilized for kids in the future, for whatever you learned about them in that meeting, right? For X, it is super important. So you're drawing them back emotionally to what they told you their priority was, that we make sure this monthly budget is aligned so you can have a nice, secure housing situation, right? Look, it is a big deal in America. We have not made enough housing, period, end of story. We have not done this for decades. There is going to be major instability in housing for people. So for someone that is an S, we want to give them a stable housing situation so you can build growth, wealth over time, and you can accomplish the goal each month, right? The monthly budget is the check away, check away, check away, check away, check away, right? And then Herb, I see your message, but we'll get back there. I'm going to finish on the C's, right? So let's say Wednesday is an engineer. Hey, Wednesday, as promised, I'm delivering the numbers that we discussed. We really wanted to delineate your monthly return on savings. And do we put that into the house or do we put it into an account? Which is better for you? And then I would probably go into a couple more stats for somebody that's a C, right? Average market rate is this, this, and this. Here's the link to my local association realtors so I can back it up with non-biased opinions, right? I would tell them, here's the data change on your 10-year treasury in the past 3 to 4 months to show where rates are trending. So I'd give them some other third-party stat to show that I've paid attention to them and I've done extra research and due diligence and brought that in. Cool. Did that answer your question, Dave? You're on mute, so I'm gonna say maybe.
Well, first of all, I said boom.
It was a silent boom.
Yeah, it was a silent boom to myself. I just repeated myself though. Paul Hurley on Facebook just said, you just gave him an idea for a client that's closing on Thursday. Thank you very much. Paul, thank you very much for tuning in and giving us feedback. Herb will be right at you. I think that was a great question that you asked.
Yeah.
Keep the questions coming, everybody. Before I do it, I just want to connect the dots. Like, what score does someone need to have on the disc where they would rather have this? Like, hey, here's your rate, here's your payment, here's your cash flow, versus options, strategies. Here's the deal, guys. There is no personality style. Like, every consumer would prefer to have options, would prefer to have the transparency of how those options perform over time than a mortgage transaction. And guys, we are in a market where rates are high. Like, interest rates suck. They're like 8-ish% now. And so delivering rates when they look like this it's never been more important that you're giving people options and you're showing people strategies over time, regardless of what disc score they want. It's like, you got to stop playing checkers and you just need to start playing chess. I love the, emotions and math. I love the, the data and expectations. So let's see, let's go into, who was it that asked that question?
Herb, I want to get your question, but I don't know if y'all heard what Dave said and if it really resonated. Options equals transparency. Options equals transparency. Everyone knows they have options. Everyone's seen Barbie on Zillow, whatever, right? Like everyone knows, like I watch football, there's a lot of mortgage ads. It's a thing, right? Everyone knows there's options. If you present only one option, like that little loan estimate picture that he had on there, it does not look like you're transparent. It does not look like you're a professional. It looks like you're working to steer someone, which I know we don't do. That's illegal. All right. Whereas it could very simply be like, no, this is what they asked for. They asked for 5% down, right? So you need to make sure we're giving them options of transparency. Like it shows that you're in their best interest and you want them to make the decision, that you're not making it for them, that you're in it together against the problem of the high interest rate, against getting that offer accepted. Options equals transparency.
And I gotta
key.
play off that and do a little Jeremy Forcier scripting. So first of all, when you're doing a total cost analysis, you're showing options, you're showing the cost of those options over time. And let's face it, you're still going to get shopped. And most people that are tuned in, I don't actually know who's got the lowest rate in America today, because it changes every day, it changes every hour, and no one watching this is going to always have the lowest cost over time. So when you do get shopped and you get grinded, first of all, Jeremy Forcier script, oh, would you forward me that total cost analysis with the transparency of cost over time that they did for you? And then just, so like when you get shopped and you're going to get shopped and they have a lower rate, oh, forward me that total. And Jeremy would say, hey, forward me that, those options with transparency with the video. That's how Jeremy would say it with the video. Oh, they didn't do that. So first of all, kind of throw your competition under the bus, because they're probably delivering something that looks like this. And then here's the other thing, use transparency to help win the business. So because interest rates are probably going to go down sometime over the next year, whatever loan they're getting right now, they're not going to have it forever. So use transparency and show the cost of your competition who's got the better rate over 12 months. Now, what most loan officers do when they negotiate a price exception, they do it based off of an 1/8 in rate or a 1/4 in rate or 3/8, which equals basis points, which is expensive. And according to Optimal Blue, the average price concession is 80 basis points right now. What you're going to do is you're going to negotiate dollars. So figure out what the cost is over the course of 12 months between what you have and what they have. And by the way, sometimes you'll find out, hey, there's more to meets the eye and it's not really the deal they thought it was. But let's say it is a better deal. Now, when you negotiate with the consumer, offer them $1,000, offer them $2,000. You're better off negotiating with dollars versus rates and basis points. So anyways, just wanted to play that forward in this market.
Yeah.
And thanks for all the reactions, guys. You're making the call fun for the two of us.
Right. And people don't remember, they don't know basis points. They know dollars. Oh, I need $1,000 more. Okay, cool. Right.
Noted.
All right. Herb, what are your 3 areas you're triangulating for trust for each client? My guess is based on type. So the standard triangle for trust is yourself, the client, and the person that referred them, right? You trust Dave, right? Dave said to call me. Cool, you can trust me, right? When we're doing it from a personality type, we're doing it a little bit differently. It's me and you and the goal, right? Me and you and the goal. So Wednesday, it was so important that you have your family over for Thanksgiving. Let's make sure you win. I do not want you to lose before the holidays. Me and you, holiday goal, right? It is super important to have a stable monthly. Like, hey, it's so important that we have your budget aligned for you, so you know exactly how your paycheck's going to break down each month. It's so important that we have X, Y, and Z. So it is them, you, and their goal. And the way you reflect the goal is based on the personality type. Is it warm and fuzzy? Is it a bullet point? Is it stability? Or is it like a really statistical side of it? Hopefully that answers your question. Or
Yeah, that was great. And I want to also drill down on what are the most common, obstacles and needs in this market. This is a slide from an interview I did yesterday. It'll be on our YouTube channel in a couple days. But we really addressed these three challenges in the market. Number one, reluctant to give up a low rate and move up. So there's a lot of people that they want to move up. They want a bigger house. They want a different school district. They want to move up, but they feel trapped. Waiting for rates to come down. There's a lot of people like, oh, you know what? I know they're going to come down. I'm going to wait. Waiting for house prices to come down, and hesitancy for buyers to overpay. Like, people don't want to overpay. Austin, what are some other common challenges you're seeing in the market? And if one of those is kind of like the big one, let's try to put a little more meat on the bone and also call out what you think the biggest ones are.
So let's just take the two head on, right? The low rate and waiting for rates to come down, right? So when it's coming from rates to come down, what I show people is how they can negotiate. Like, look, I want your rate to come down too, right? We don't make any more or less depending on the interest rate. Like, I want you to have the cheapest thing possible. But what I really want you to do is to be able to get a property with more concessions and more money in your pocket. So if rates come down, for every 1% that rates drop, about 5 million more Americans come eligible in the market. Last time I checked, there's less than 100 houses for sale. How are 5 million people going to actually be able to buy, right? So what I want you to do now, while rates are high, is to be able to negotiate more towards your closing costs. Your down payment goes further. I want you to be able to negotiate a 2-1 buy down, so your rate is held low, and if you refinance, that money goes down towards your principal payment. I want you to be able to negotiate so you get the timing you need to move versus the seller calling all the shots, right? So that's how I handle the first one. But I think one thing that so full disclosure, folks, what I'm doing to generate more leads every single fall I do this, I'll call clients from about 4 years back. So I will be calling all of our clients from 2019 in the next 3 weeks. I'm going to break it up into some 6-hour chunks there. And what I'm going to say is, your lower rate does not serve you. Your lower rate does not serve you. It's not getting you the school district you want, because private school is expensive, right? It is not paying off your debt fast, because consumer debt is expensive. And it's not getting you an extra bedroom so your kids don't have to share a bedroom with grandma. Your lower rate does not serve you. What serves you is leveraging your equity to buying something better, right? That's what serves you. The debt is a placeholder. The equity is your gain.
So I want to share a couple slides, but I also want you to help, just the way you helped with Triangulate for Trust. I want to hear how you triangulate for needs. So, I already said this, a minute ago, like, this rates have gone down for 40 years and speed to lead was enough in many cases. Going forward in the industry, it includes getting there first. It includes triangulating for trust, but now we need to triangulate and we need to get to the need of the consumer. So, and let's face it, there's a lot of first-time home buyers coming in. So sometimes it's a renter, like getting off the fence. They think rates are going to come down and real estate values are going to come down. So we gotta show them what homeownership, what buying now looks like in this market. We need to help move up buyers get clarity and confidence around, hey, should I rent out my current home and move up? Should I sell it and move up? Again, helping people get clarity and confidence and becoming a master at speed to need. So let's kind of I would love to hear a process on how you triangulate for need and include, your personality piece within that. If you had a framework, what would it be?
Well, the first thing I'm going to ask people is, what do you want to do? Where do you see yourself? Why is this actually important to you? What is your biggest concern about moving forward? Why? Get to the why, get to the why, get to the why. Tell me more, tell me more, tell me more, right? I find that simply saying, tell me more versus why is a very different conversation. And that's going to get to your need faster, Dave, because if you say why, it's like, dude, I just told you, why are you freaking kidding me, right? And if you say, tell me more, you're asking to collaborate with them, right? So we're figuring out what that true need is, right? And then as far as basing that on personality type, again, we're going to dig in on the tell me mores at least 5 different times. And then I'm going to be able to pull something out, because if you ask somebody like, hey, how did you meet Dave? You're going to also be able to figure out their personality type, right? Oh, they're my coworker. They're cool, right? Oh my God, he's the nicest guy ever. Da, 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 da. Like, oh, I've known him for years, right? Well, he seems pretty trustworthy. He did X, Y, and Z, right? So we just went through the personality type. So remember, your triangle for trust is not simply, hey, me and you know the same person, life is great. It's also figuring out how you're going to relate to that person, right? So if I figured out that somebody is a compliance person, was referred by Dave, and their need is that they want to be in a good school district. Why do you want to be in a good school district? Oh, because it's cheaper to go to public school, or I believe in public school. Well, why do you want to be in public school? Because they have better resources for my kid. Right now, we're going to take it all back. So even if they are a super engineering techie person, hey, Bob, you told me the most important thing is that you're in the school district for your kid. Your kid is X years old. Therefore, the difference in your cash to close with that extra 5% down versus that $500 a month, $500 a month is a lot cheaper than private school, correct? Yes, it absolutely is. Did that help answer your question? Right. So we're triangling and digging down and going back to what they said.
Yeah, no, I love it. I am going to add something else in when it comes to triangulating for needs in this market, is we need to broaden the need beyond the mortgage transaction. And so, at the end of the day, the biggest need people have, I think, financially, in most cases, is they want home ownership and they want financial freedom in home ownership. So make sure that you're learning what financial freedom is to them, what home ownership is. And then when you're triangulating for needs, like, your lowest, having that low rate is not necessarily going to help you achieve, one, the home you want, and 2, financial freedom, owning your home and financial freedom. And so it's never been more important. And going forward, remember guys, 63% of every mortgage in America is either starts with 2% or 3%. So, and rates are never going to be 2 or 3% again. So you need to become a master at the skill of helping people like think beyond just their mortgage. There was I don't know if you saw it on social media. I'm gonna see if I can pull it up, but Dan Keller put a pretty funny cartoon on social media a couple days ago.
I saw DK do that one. Yeah.
Yeah, I'm gonna show
brilliant.
it right now. So guys, this is a perfect example of how Dan is putting the focus on the 5-year net worth report. So go to Dan Keller's social media, kind of putting a little humor. Hey dad, what did you do when everyone was too scared to buy and rates were 7.8? Of course, this is dated because they're over 8% now. But he showed them a 5-year net worth report, with MortgageCoach. So guys, it's never been more important than when you're triangulating for need. You need to make sure that a piece to the puzzle is net worth growth over 5 years and financial freedom, in the long play. Anything you want to add to that?
You know what, Dave, that really is a good segue, or something that we spoke about earlier. And is if hopefully everybody is familiar with Jeb Blunt on this broadcast live webinar thing, right?
Boom. Check out the book, everybody.
Y'all, this is epic. fanatical prospecting. Like if you're a loan officer, I mean, if you're a salesperson, period, this has been written for you, right? He wrote this a couple years ago, just before all this little crisis stuff started happening. And Dave and I were laughing because I'm, again, a nerd. So if I read a book and I like it, I'm going to distill it into a class, and I'm going to distill it down. So I wanted to share with y'all, if I can, a quick, it's going to be like a single slide, basically.
So anything you want, let's go.
But when we're talking about this, he's talking about how to speak to people. So what I've distilled down, and I'm happy to share this too, is we got to remember that our message matters. We need to create phrases and emotional words to create a bridge. And whether you're doing this in your video for your TCA or the written, and ideally your video and your written correlate somehow, right? It was great learning more about you. Hey, I want to share some insight that have helped other clients overcome this market, right? This is a unique understanding of your situation of rent versus buy, right? Or buy before sell. We want to see how this may fit together. Again, remember, transparency is in options. Options equals transparency equals trust, right? We want to make sure you have flexibility. We want to make sure you have options. We want to make sure you have peace of mind. I know it's frustrating out there. I know you're concerned with where rates are. I know it can be super stressful in this market. I know you feel like you can waste. This is your time. This is your money, right? We want to avoid saying things that are disingenuous because we're all programmed to shut down salespeople. Like, hey, how are you today? I don't care. I don't know you, right? Like, to shut up and be confident. Like you said, Dave, before, J-Force, aka Jeremy, right? Send me the analysis from the other lender, and let me make sure that that video is good. And you wait, the crickets, right? We're not talking about ourselves, we're talking about them. And we, again, making sure that we are not manipulating folks, that we're being transparent. And that's what I love so much about Mortgage Coach, is it's very, very transparent on the numbers, right? You can pick kind of which things you show people, right? Maybe it's more important here or there based on their goals, but it's all there and the data is all correct. So I really think that as we continue forward, we have to remember, again, to connect that math and emotion for folks and distill this down into our presentations. And then when we call to review the presentations, we need to bring that back too.
Love that you share this. Thank you so much. Pure gold. And you're getting some nice emotions from folks. So thank you guys for the hearts. We like that kind of thing. So let's do another story and strategy. I know you've got another TCA.
Yeah.
It looks a little bit like you're addressing the need of, should I buy now or wait? But I'll let you speak to it.
Yep. So this one, again, I'm going to preview, and I left the blank message on this, right? So this person was saying, oh gosh, rates are go down, right? And this is a very analytical person. So my good friend, Mr. Herman Munster, right? Hi, Herman. Happy Halloween, right? So we took the median condo price today in our market, and we said, well, what if prices increase by 5% and rates drop 0.5 point? So to be clear, my market has increased over 5% year to date. So for Herman, I've been able to integrate, and when we did our initial Zoom meeting, I pulled up the Association of Realtors website. I showed them all the stats, so he could literally see how it's changing year over year, and gave Herman access to that data for his review as well. And I said, well, gosh, look, what if that changes and prices increase by 5%, but rates drop 0.5 point? Well, Herman, guess what? Let's look at this. We're talking about $75, $75. Still cheaper today, right? So it's still better for him to go ahead and do this. And we looked at what the 5-year loan cost was, and then we looked at the cash to close. So that if the price increases and the rates drop even 0.5 point, Herman's still bringing in almost $20,000 more, right? So for this person that was a very C person, a very compliant person, we're drilling down for their money, and why does it actually make sense, right?
Yeah, no,
Anything
again,
on there you want to key in on?
you're given personal clarity, which creates confidence. And I interviewed Sean Herrera a couple of days ago, and he said, confident buyers write confident offers. And Guys, that's a real value to real estate agents. I mean, everything that she's going through makes her incredibly valuable to real estate agents. And that's why, you know, there's 88 listings in the market, half are going in cash, but Austin's doing 12 in a, you know, a very, very competitive market because she's slowing down and she's bringing this value. Austin, do you ever like do that strategy and maybe make like column 3, 6.5, which would be like a future refi? Like, hey,
Yeah.
I can get you in now, you know, and then, you know, date the rate, marry the house. You know, do you do that very often?
Yeah, we'll pull up those in there. We also will do a separate calculator. I think that it's really important to show people that from the get-go. So I have a qualification calculator I use that is outside of MortgageCoach, and I simply show them like how it doesn't make sense, right? And how their price points. Oh, you have $50,000 and you want a 3-bedroom condo. Cool, we're looking at 750. Here's where you said your payment goal is, here's higher, and here's what it looks like going down, but if prices change. So I will play that from the very beginning with folks. And again, if the real concern is, well, we're gonna wait, I wanna show them that refinance, because I can't get you the refinance if you're not in the house. Right.
Triangulating for need, you know, she's always fine tuning that. So I want to play a clip that I play a lot. And so for anyone where you've seen me play this multiple times, sorry, but I think it's important because I want to, in these last 15 minutes with Austin, I want to really talk about how to leverage being an advisor, and how do you do that to get more referrals from realtors, whether you're recruiting a new realtor, or you're just getting more referrals. So this clip is from an interview I did with Shay Jenkins. She's in Denver, Colorado. Last year was her second year as a full-time loan officer. She did 53 million last year, so she had a pretty good year. And I'll ask you a question after I play this.
I was going after this huge, one of the top agents in Denver, and I had been trying since I was an assistant, I had been trying to get this person. And finally, the poor girl gave me a break and was like, Lord, like, here you go, take this one lead. And I took the lead and I did a mortgage coach. And I was just like, you know what, why not? I'm gonna CC the agent on here. And then that's when the agent picked up the call and she's like, are you serious? This is the coolest thing I've ever seen. And I'm like, what, mortgage coach? And I was like, you're the top agent, you've never seen this before? And she's like, absolutely not. She's like, this is amazing. She's like, would you be able to do this with all my buyers? And I'm like, yeah. And she's like, that's so cool. And again, in her head, I think she was thinking, I'm up all night creating this massive presentation with all these numbers and graphs. And I got her business and she's one of my top agents now.
So guys, and there's stories like that all the time. So first of all, I'd love to hear, you know, any thoughts on that? Are you CCing your realtors? How are you using, you know, all these skills that you have with agents?
Yeah, we ask the clients from the beginning if we can include the realtors in their scenarios or not. Because some people are particular. However, I think there's one step further that she just gave me the idea to do that I'm going to implement right away, is for any whale that I'm chasing, I'm going to make these TCAs around their listings. So if they've had a listing that's been sitting for X amount of time, which in my market is like, oh my gosh, it's been on the market for 3 weeks, must be something wrong with it, right? Like, go pull it and say, hey, here's how you can get over these people. Here's some ideas for your seller. Like, here's the 2-1 buy down that your seller can do that gives more money in their pocket and gives more money in your pocket, and show them and do the video specific to them and that property, so we can help them continue to sell it. And then of course, if they've got that link, we can see who else views it. We can see who else views it. And that's what I love about, you know, the nerdy side, of course, of MortgageCoach, because we can see when people view it and when they share it, right? So why not send that to a realtor that you're going to do something, maybe an open house with them this weekend? Why not?
Yeah, no, that's come up in a number of my interviews. I just want to show an idea. This was last year, and one of the things that Amber does, she's a market leader in Chandler, Arizona. Like, if you drag your mouse over this, not your mouse, but your phone over this open house flyer, it's going to go to a total cost analysis, you know, something that creates that house more affordable. 2-1 buy down options, seller funded buy downs, anything that helps the agent sell the home. You want to do that. And I've had that come up in a number of interviews where top producers are getting out and they're going after it, and they're showing strategies. I interviewed Sean Kaplan. I interviewed him twice this year. Once in January, where he had created a TCA for a builder that he had a relationship with, and he actually, for the first time in 10 years, he actually got a lead. Like, the builder's like, okay, I need your help. I interviewed him last month. So 6 months later, no, 8 months later, and he's closed over 20 loans from that builder. And he used a total cost analysis to get the attention of a builder. So recommend that you do that, Austin, and let me know how it goes.
Yeah, absolutely. And y'all think differently, right? It's not just your realtors. These are your financial advisors. So many financial advisors have people that are stuck in their houses, right? Can you do some sort of bridge loan? Can you help them buy without them selling first, so it's easier for folks to downsize, right? Show this to them so they understand, and so they don't think you're simply trying to spend the money that they're investing, that their paycheck is tied to. Show it to your real estate attorneys, right? Think of the different people that you can help. Show it to folks that do insurance for business owners, right? Show them how they can retain their employees by helping their people buy housing, because employees that own property near where they work are like 20% more likely to stay over time. And it's expensive to get new employees, right? These are things that are going to help your sphere besides simply your day-to-day normal people, right?
No doubt. So let's close out with a few more things from Fanatical Prospect, because I believe that in this market, every loan officer needs to be an advisor, which, by the way, everyone, that's one of the reasons why for the past couple months, I have obsessed with the Mortgage Coach 10X. So I want to remind you, if you go to trustengine.com/10X, we'll put a link down below. Not only is there just a lot of great interviews that you can watch that are all centered around one more loan, one more realtor, but all on this same page, you can sign up for our live training. So in-person live training every single weekday. This is the Tuesday interview. So if you want to sign up for Tuesday interviews, go here and sign up. But Wednesdays, guys, we're teaching strategies. Like, everything that you're learning right now, you can come to any day and get a live trainer and get trained on that. Every Thursday, we're doing live training. And by the way, if you're new to Mortgage Coach or you don't know how to create these TCAs, there's 24 hours a day, 365 days a year training. Digital training, all of these are like 3 to 10 minutes long. So lots of sales strategy training up here, and then lots of how to do this stuff training. So with that said, let's close with some, fanatical prospecting ideas that you think everybody needs to hear.
Yeah, absolutely. So there are 5 steps when you're making any sort of phone call, whether it's a voicemail, you're going to repeat a couple things differently. And I think that we have to take the scripts and the way that we speak in our phone conversations, we need to also translate that to all the videos that we're doing, right? So you're getting their attention, you're saying their name, right? So step 1, get their attention, say their name. Step 2, identify yourself, right? Who are you? Where are you from? Right? If you're leaving a voicemail, say your phone number twice. Step 3, tell them what you want. Step 4, bridge to a because. And step 5, ask for what you want, right? So the way it would go in like a TCA video is, hey, Bob, it's Austin from Homeowners Financial. The reason that I'm doing this video with your analysis is because I really want to make sure you highlight the difference in monthly savings, the building wealth over the time, because, and that's where your triangle comes back into the need, right? Because your goal was X, because your goal was Y, and then ask for what you want. I really want to make sure that we get into a house and help Dave grow his family or whatever it is, right? Like, I really want to make sure that we have the best plan forward and options for it. I really want to make sure that we follow up and have a communication on this, right? So we're going to get their attention by saying their name. We're going to identify ourselves, right? Who we are, why we're doing all this. We're going to tell them what we want, right? Where do you want to highlight for them? And then the because, right? That goes back to the speed to the need, that goes back to their goal. And then we're going to ask for what we want, because I want to make sure you get in a house before the end of the year, because I want to make sure you understand all your options and we're working together, whatever that case is. So that's a 5-step framework from fanatical prospecting that, again, I think is super legit for any conversations we do.
I think it's pretty legit too. So we got 4 minutes. I'm going to put you on the spot. We're going to do a cold call to a realtor. You called out a whale, like, hey, you're going to call a whale and you're going to walk them through this. What's it sound like when you're going to call someone with the goal of bringing them a finance strategy for one of their listings? Ring, ring.
Got it. So I would ring you. So ring, you're answering.
Oh, yeah. I'm doing it.
Ring. Hello.
Yeah.
Ring.
Hello, Joe Whale here.
Hey, Joe, it's Austin Lampson at Homeowners Financial. The reason that I'm calling you today is I've noticed that your property at 1234 Main Street has been on the market for 60 days. And I want to give you a tactic that's going to help you sell it, because I know that buyers in this market really need to buy your property. Is it better for me to email this to you, follow up with a text message, or can we meet in person to review it together?
Cool. And what do they usually say? Like, I would think email. Yeah, send it to me.
Exactly. Everyone's going to say email, right? And that's okay, right? Because you're going to actually do all of them, right? You're going to email and then you're going to text them like, hey, I just sent that email, right? I want to make sure you had it. Here's the link as well. You can do a video. You can do it through BombBomb. We're going to do the TCA video. You can record your TCA video twice and then send it to them via a text message as well. And then you can also have those flyers dropped off at their office, additionally with that sexy QR code.
Boom. So Austin, you got to keep me updated. Once you've called some realtors, you've tried this strategy, let's do another interview on this. You have been incredible. My second interview has been awesome. I didn't think we could do better without Jeremy, but I think we did better.
We'll
you hear
both
that,
text him
Jeremy?
and tell him.
Yeah, I know. We killed it. Any last thoughts you want to share in this last minute before we say goodbye to everybody?
Yeah. Hey, look, y'all. The two things. One, you are literally building the life of your dreams right now. Like, I know it's been hard for a lot of people. We've asked for less competition. We've asked to get better. So this is what you're presented. Remember that every day is an opportunity. Every difficult situation brings an opportunity. And the other thing I'll remind all is that our words have power. Please do not use weak words. Work to remove try, but, and just as a time reference only. It is not but, it is and, right? You are not try, you are only doing. Speak powerful, be powerful. And I'm really excited to see everybody level up.
Yeah, another really important book. I was just looking for it. It's somewhere close by, but Exactly What to Say. You know, we had the author of that book on Scriptapalooza this year. And he was amazing. You know, guys, that is an incredible book. It's literally a 1-hour read. The audiobook is super quick. So check it out today. I hope everybody got a lot of value. I saw a lot of likes, a lot of loves.
Thank you.
Austin, thank you for your time. And everybody, thanks for tuning in. Take care. This is a wrap.